Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's May 3rd, and I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. Man, if you want a stock tip, the ultimate stock tip, right? Just when people come to the podcast, you want to listen to guests, get my opinions, get these stock picks, what can I buy? Going to give you the best stock to buy ever. It's going to make you a fortune right off the bat. And that stock is Comcast. And if you look at Comcast, these guys are amazing. Yes, classic rant coming, just letting you know. But the stuff I've been going through the past few weeks with these guys is priceless. Not only the past few weeks, for years. Because what we're doing here at Curzio Research is building videos, building platforms. So we need faster speeds. We need faster internet speeds. We're incorporating more video. When it's not just for our Facebook page, the Curzio Research Facebook page, but now we're going to be incorporating videos directly to subscribers. So subscribers out there, pay for our services. Really cool. And a lot of people love free stuff. I get it. That's fine. Listen to the podcast. But for the people, our subscribers, you're going to get video updates soon. Video lessons. There's going to be no extra charge to subscribers. It's going to allow me to send you even more content. Also send you videos when I'm on the road, in the field, which those things are really cool. I can update you a lot faster when it comes to the portfolios. Because these days we're seeing volatility where stocks can move 5, 10% on a weekly basis. And for me, as a guy that's on the road a lot, doing research all the time, meeting partners that we can work with to bring more value to you, our customers, and things like that, doing a video is a lot easier than writing some of these alerts, and sometimes it can be a little bit timely. And you want to get these things out faster for your subscribers, right? So you know exactly what to do, especially if a stock's selling off or, you know, when things go up, people are always cool, but selling off, you need to let your customers know, hey, and your subscribers know, as you guys know, this is what we're doing, and if we're stopping out, we're adding more, but just, hey, here's what we're doing. This is what we need to do when things don't go right? Because anyone who has a portfolio is going to be things that don't go right sometime. They want to get updated right away. We can provide a much better service for you. Again, all this stuff is coming really soon. Now, getting video and getting your internet up to faster speed shouldn't be that hard. Because to use these services, you know, again, you need super fast internet to do video, not just downloading, which you get anywhere, but uploading, which is important, which is not as easy to get, at least where I am. So for Comcast, they offer much faster upload speeds. Their only competitor is AT&T, which really doesn't offer any business services, and they don't have fast upload speeds. So we wouldn't be able to use video unless we use Comcast, right? Comcast knows this because AT&T is just starting to lay their fiber every place. And, you know, I have AT&T for my house, which is residential, but it's still a little bit slow. Again, I live in northern Florida. So Comcast knows, yeah, they have no competitors, and basically they know they can provide the crappiest service, charge you a fortune while making fun of you while you complain. It's a great business model. For example, I'm now paying a small fortune for internet. So now it's Comcast. My office is located in a business district, which means I have to use Comcast Business, which basically means they're charging you 3 times the price for residential service. They say, oh, you get to talk to our businesses. We go out there for it. No, trust me. You get nothing. They just, oh, it's business. Oh, okay. It's 3 times more. That you have to call them. Something's wrong, and you still get an automated system, right? When the automated system comes in, you got to put your number. Oh, what's your account number? What's your social security number? What's your date of birth? All in an automated system. And then they have a little pitch in there. Oh, if you'd like to upgrade, you have to go through that whole entire process, whether you're a residential client or whether you're a business client. And then they have somebody finally pick up the phone after 15 minutes. You tell them their problem. They say, okay, what's your name? What's your account number? All the questions that you just spent 15 minutes automating what your number is putting in, you get someone on the phone and they ask you the same questions all over again, right? Very frustrating, especially for customers that are paying a lot of money. So now I paid a fortune for internet. I do not have business phones in this office. We have business phones with customer service and everything else. But I use basic TV services. I work here late, and sometimes whether it's I'm watching the draft or watching a playoff game or something like that and taking a break when I'm eating, whatever. But they force you into the triple play services, right? Even though you don't have a phone, even though you use basic TV services, so they bundle you up into this whole entire thing, which is what most cable companies do, right? That's how they pad their stats. And I get, we had this many triple play customers and this many phone customers. And how do they do that? They basically say, well, if you want internet by yourself, we have a special deal for triple play customers. You only have to pay $250 a month for business, but if you get internet on your own, it's like $7,000. So you're like, okay, I'll take the triple play. And they lock you into a nice little contract, and then what happens? It resets after 2 years, and then you're going to wind up paying a fortune anyway because it was in some fine print on page 87 of their 200-page services agreement that you can only find by going online, right? Kind of normal for all companies like this. So to get faster speeds, it's going to get better, guys. I'm not going to waste your time with this rant. It gets better. They say, sure, it's going to cost extra money. So now for internet, you're paying close to like $400 a month. And it's a necessity. We have no choice, and there's no other people to go to. No, Comcast is a monopoly. So they make you sign a new contract, which I did. And they say, well, someone will come out to install a new, more powerful modem for you in a couple of days, right? So that's what I do last week. 2 days go by. The guy emails me and says, hey, you have to sign the contract through DocuSign and stuff. I said, I already did. I signed it Monday. I resent it to him. He's like, oh, I didn't know. Okay, well, we'll have a guy come out to you in a couple of days. I said, you said that on Monday. Now it's Wednesday. I said, we really need this stuff because we're starting to incorporate a lot of video. I want to do it fast. He's like, all right, I'll try to expedite the service, get someone out there, whatever. But he's going to call you before he comes. So it was Thursday now. I walk into my office around 8:30. One of our employees here got here a little bit earlier. And there's a guy under my desk from Comcast with the modem. I'm like, I thought you were supposed to call. He's like, no, they just told me to come here. I'm like, I was kind of happy. I was like, okay, cool. We got it. Now everything's installed, whatever. So luckily someone was here to let them in because they never called me. My internet now is faster than ever. It's great video working. It's awesome. I turn on my TV. I have no high definition channels and the TV doesn't work. So I call them up and say, why doesn't the TV don't work? And, hey, listen, I got internet services. We just upgraded. We're paying a fortune for internet services. I mean, to get fast speed internet service, to pay $400 a month is a lot of money. We have no choice, right? They have a monopoly. We got to do this. That's fine. Well, you never had high definition on your TV. I'm like, well, I had your service for 7 months. That's how long we had the office. And I'm like, I had high definition because it's a different set of channels, right? It's totally different from regular. I said, I'm watching high definition every single day. You didn't have it. And they were adamant about it. You didn't have it. I'm like, I had it. So basically, they're lying to me. Now, what happened is when I signed a new contract with them for internet, they basically took everything that I had from the previous contract and set it to basic. So now I call and I said, could you give me the services that I had? They said, well, we can't do that, but we could give you high definition, an extra $10 a month. So I said, let me get this straight. I just upgraded my services. I'm paying $400 for an internet that most people pay $75, $80 for, and you want to upsell me on a service that I already had? I'm going back and forth with them. I'm on the phone for 2 hours. Now, guys, look, I run a business now. Having a business, any of you who have a business, the hardest thing with business is running a business and spending time with your family. So every minute's accounted for. So for me at this stage of my life, time is the most valuable commodity. And when I get a minute wasted, it really pisses me off because it's always busy. You always want to do something. That minute I could spend hanging with my kids or whatever, or my family. Over 2.5 hours. Finally, right? I get a guy on the phone. He's like, okay, I can help you out and I can do it. And this is me arguing and yelling at them saying, listen, it's up to you because this is going to be a case study. And here's your opportunity. I said, I'm taping this for quality purposes on my end as well, because I want to see how smart you guys at Comcast are, because you're going to have an account. I'm going to leave because I'm in the 30-day period. And that's a thing, guys. If you want to know how to get around all this crap, when you sign a contract and you got to be locked in for 2 years, sign another contract with them. And that's a brand new contract. And within the first 30 days, you can cancel your entire service, right? So when you sign a contract, they give you 30 days. After that, you're locked in. But if you sign a new contract with them, the contract gets void. And a new contract exists. And that new contract, you could cancel within 30 days and get rid of your whole service. Something you realize when you get screwed like by 10 times by the same company. So finally, they get all the services. They try to get service. He's like, all right, I'm sorry. I got the high definition up. And I'm saying, listen, you have the opportunity right now. This is why it's going to be a case study. And they're going to be listening to this. And hopefully they talk about this. Because you're trying to charge me $10 a month to get something I already had for $120. Or you're going to get what? Pretty close to $5,000 a year as a client on internet service. So I'm telling them, listen, you have the opportunity right now because I'm going to cancel if you don't give me what I want. Basically, I'm talking out my ass because Comcast has a monopoly. I can't change, right? So I'm putting up this big fight. Telling them. So finally, the guy helps me out. Says, I put together 2 packages. We're going to be able to install the high definition. We apologize. Guy was really cool. Now I'm on the phone for 3 hours, though. Guy's like, just sign a new contract. I sign it. This was Thursday. It's now Thursday. I still don't have high definition. They sent 3 different contracts to me. I'm still calling them. And I had someone else call 2 days ago and say, hey, we want to come and install the modem. I said, you did that last week. Nobody told you. Well, I don't have it in my records. You sure? Yeah, I am pretty sure since I was on the phone with you. You know what? For how long? But when you look at companies like this and monopolies, I'm telling you this story for a reason, right? Oh, Frank, enough with the rant. Get to the sucks. It is important to understand this because I hate Comcast. They're assholes to all their clients. They know they can be because you can't go anyplace else, right? So personally, I do not like these guys. I mean, these are guys that charge me extra, and I call them. They're like, sorry, they're scammers to me, right? This is how they treated me. If you look at the Better Business Bureau and all that stuff, they were ranked last year as the worst company. This year, they're on the list, ranked in the top 20 top worst companies, and especially with customer service in America. And then the year before, they actually got fined $2 million for overcharging customers, right, without telling them. So this is a really crappy company. Now, the reason why I'm saying this and making fun of it, because when it comes to investments, you want to keep your personal stuff aside. And that's what I learned. Like for me, as someone where people listen to, my dad passed away from lung cancer, right? So right away, it's like I have a bias against tobacco companies because during that time, they didn't tell you all the stuff what they tell you now. They didn't know. They just, put more stuff in it, made you more addicted and whatever. I went through the process with him. He couldn't get off of it. He had lung cancer, wanted to pass it away, all that stuff. But as an investment advisor, because I'm giving you the most extreme example, I can't look at that and say, wow, these companies are terrible. You should never buy them. When you look at Comcast and companies like this that have a monopoly, they don't have to worry about customer service. That's why they suck for the last 10 years. They don't have to worry about anything. They have incredible pricing power, right? They could charge you whatever you want. I'm paying $3.99 for the internet that usually costs probably $89 to $99 anyplace else. I have to pay it. I don't have a choice. If I don't pay it, then you guys aren't going to get updates. You're not going to listen to this podcast unless I do from a different area code. So when you look at investments, that's the way you want to look, because right away you look at the company and say, that's terrible. How, you hear this personal experience, like with Facebook, oh man, private policy. Like, I don't know how everyone in the world didn't know that was taking place since you provide everything on Facebook. But when you have to take a step back and you're looking at it from an investment point of view, don't let your personal feelings get in the way of that. Because Facebook's trading at a market multiple and growing at 35, 40 times to a market that's growing probably around 15 times. So you're talking about a company that should have a market multiple that's a lot higher when you look at Facebook. And when I look at Facebook as Tesla, Facebook has incredible pricing. Why? Because they reach people. When you're advertising, you're going to pay more money if you get better results, and nobody gets better results than Facebook because they monitor what everybody's doing. They're basically monitoring everything that you're telling them. I'm here. This is what I like. Here's the pictures I like. Compared to, you going online, or you say if you have a business and you want to market it through Comcast or through TV, and they're going to give you these demographics. You don't know who the hell's watching TV. You don't know who's had the TV on and fell asleep for 10 hours. You have nothing. You don't know. You don't know. Unless you have Roku, because if you have Roku, they have remotes, and go into those settings. It's interesting. Do you want us to turn off the microphone on your remote? Because it's set up to be on so they can listen to you. Pretty crazy. But the point of this rant is not that this Comcast is horrible, but as an investment, when you have a company that has a monopoly, when you have a company that has pricing power, it's a stock that's going to generate huge profits. It's something that has done pretty bad since January. It's a good stock. And if I was on CNBC and the CEO came on and he said his treated customers good, I'd call him out immediately. I say, you got to be kidding me. It's like DirecTV when the CEO came on CNBC. He goes, yeah, now we're getting a lot of traction with our packages that we do $29.99 we start out with. And for me, I would have said, come on. I mean, your $29.99 package is like it's 4 channels and they're in black and white with nothing. With nothing. I mean, with the box that's probably 100 years old. Hey, maybe you offer that for a month, but there's nobody that's on a $29 service for DirecTV. And I'm not talking about the new streaming services and things like that. But I know I like DirecTV, but don't tell me that, hey, we're getting a lot of traction and we're helping our customers at $29. It's an introductory rate, and then you charge them well over $100 on average when you look at the numbers. But guys like in these industries, when you have pricing power, that's what you want to look at, and don't get your personal feelings in the way. Because for me, I want to beat the crap out of if I see a guy at a Comcast truck, I want to cut him off. Everybody there that I've ever dealt with. Schemers. But when you look at the company as a whole and they have a monopoly and everything like that, putting my personal feelings aside, Comcast is actually a pretty good investment on this pullback. If you can invest, that should be an educational segment, but that's an opening because it was a rant. I love getting that stuff off my chest. It's therapeutic. It lets me free. You'll see. Now the podcast is going to flow perfect now. I'm going to have a great educational segment even before that. I really, really, really have an awesome interview for you. awesome. Included, about to interview the only person, and I'm being dead serious when I say it, the only person I follow when it comes to investing in international markets. I'm talking about Kim Iskyan, who's the editor of the international newsletter at the Stansbury Church House. The newsletter obviously focuses on international investments, but it's not just a lot of times you see, well, ETFs and this market's cheap. I mean, he does the research. You're going to hear the methodology, the things that he does. It's not just going to a specific company. He's planning the whole entire thing. He takes some of his subscribers on these trips from in the middle of nowhere. We're talking about not, oh, I've been to China. I've been to China too. I haven't been to Iran like he's had. I mean, Bangladesh. I mean, the places that he's been and the countries he's been, and probably going to be in North Korea soon, and tell you the ideas and the best things and how to profit from it. I mean, he's smart. He's real. He also gives small and large cap stock advice, not just ETFs, different ways to play this. So Kim is based out of Singapore. That's what we're going to be doing. Well, not going to be doing the whole interview, but I'm going to be interviewing him. He's going to come from Singapore. Be sure to get a pen and paper because he's going to tell you which of those countries he's investing in right now. 2 of those are going to be completely off your radar. The other one is not off your radar, but it will surprise you. And he's also going to share some of his favorite stock ideas, including the best way for you to make money right now. And this is great. Right now, on a reunification of North Korea and South Korea. You would think that would take a long time like Cuba, but no. There's a couple of investments right now that can make a fortune as North Korea, South Korea work out their problems, and it makes all the sense in the world. It could be a fantastic interview, guys. Again, get out your pen and paper. We're the only guys I listen to when it comes to international investing. Then in my educational segment, I'm going to break down America's favorite company, which is Apple, which easily beat estimates when they report on Tuesday. Or did they? Because I'm going to break this company down, no bias. This is a company that I wasn't too crazy about over the past couple of months. In fact, overall, I've been pretty right on this one, upside and downside. But right now, I'm just going to show you metrics that nobody talks about at all. It's just a different perspective, which I want to teach you how to look at stocks when you're investing. It's up 3%. Wow. They reported Tuesday, whatever, and Tuesday after the bell, and Wednesday, it's up 3%. Wow, they beat those numbers. I thought it was going to be weak. I'm going to show you a way that I look at it, which is the way you should look at it, which is the real numbers behind this company and why they could be in big trouble. Thus, the reason for that massive buyback announcement. Great segment. Definitely tune in, guys. You're going to learn a lot. Trust me. Going to raise a few eyebrows, especially when we take a deeper look at Apple's international sales. And speaking of international, let's get to my interview with the best international stock analyst I know, Kim Iskyan. Kim Iskyan, thanks so much for coming back on the podcast.
Frank, thank you for having me. This is great.
I don't know if you know this, and I might have mentioned it to you once. It's the last time you came on, I think, was probably over 18 months ago, and it was one of the most widely listened to podcasts that we had. I think it made the top 6 or 7. And I was like, man, I'm surprised. I'm like, he must have a pretty big following there, pal.
Man, that's very flattering. Thanks.
Well, I want to bring everybody in here because Kim and I met in Singapore when I was working at Stansbury, and we just got along great. He's a specialist when it comes to international investing, one of the few people I listen to because he is a boots-on-the-ground analyst that go to so many different countries. And I want you, which I know is always hard for me to do, and I know it's hard for you to do because you're a humble guy, but why don't you give us a little bit of background about yourself for people maybe who didn't listen to that interview and who don't, not familiar with your work, because what you're doing is really incredible. And again, I mean that way. You want people when it comes to international investing that, you always want to check those boxes and listen to you because, you do all that boots on the ground, have so many contacts. So why don't you give everyone a brief overview of exactly what you do and stuff, because I know you have fun doing it, buddy.
Yeah. Thanks, Frank. Well, let me just maybe give you first a little bit of context of how I got here. I was I an American passport. I also have a Dutch passport. My mom's Dutch, and I grew up in Spain. And we traveled around all the time when I was a kid, and I kind of grew up thinking that the world is kind of seamless, and you have borders and currency and language, but those, to the extent that you can get over those sorts of borders and challenges, the world opens up to you. And as an adult, I've lived in 9 countries. I lived in Russia for 9 years. I spent some time in Mexico. I've lived in Central Asia in a little country called Armenia in the Caucasus, and I lived in Sri Lanka for a few years. and I've been in Singapore for now about 3 years. And and as the world has gotten smaller, with thanks to technology and travel just getting cheaper and cheaper over time, it's just so easy, and to me, it's so exciting to be able to go to places that are off the beaten track. And I guess I've moved around a lot, partly because I get bored. And Singapore is awesome, and I'm not bored here. But what is super about Singapore is that you can hop on an airplane, and within 3 hours you can be, to countries, to situations and environments that are so remarkably different. And I like to do that. I like to do that as often as I can. And I came here to build an investment advisory business focused on Asia, for both people in Asia as well as people outside of Asia who are interested in learning more about Asia. And a big part of what I try to do is bring home just what it's like here. And on the one hand, you have countries that are there's no place in the world that's more developed than Singapore. Singapore makes the most modern city in the United States look a little bit dumpy by comparison. I don't mean that. It's not an insult. It's just a fact, because things in Singapore are so incredibly efficient. Then, like I said, you go on an airplane for a few hours and you go to probably one of the least developed countries in the world, where people earn, $1,400 a year, and you walk down the street and people are just lying on the street, and it's a different sort of thing than if you're seeing homeless people in the United States, put it that way, than when you see them in some countries over here. But anyway, Frank, that's a long answer to.
No, it's not long. It's cool because I want you to also talk about your background when it comes to actually stock picking and Wall Street, because you actually worked on Wall Street trading floor, I believe, in Latin America, but you also helped build a stock market in a country that is probably difficult to pronounce for most people. But why don't you talk about that? Because you took it in the 1990s and you built. So it's not just the international of how much you love the stock markets and how the markets work everywhere. So, I mean, talk about that, because I think that was fascinating.
Yeah, out of grad school, I studied history, and I did the reasonable thing, and I got a job on Wall Street. Only it was at a time when Latin American stock markets were taking off, and I spoke Spanish. So that was my key. Nobody else on the trading desk. I went down on Wall Street, spoke Spanish. So that was my way in, and I learned finance pretty much from the ground up. I didn't study it in school. And from there, one thing led to another, and I went to a country called Kyrgyzstan, which is just it borders northwest China and is south of Kazakhstan, if that's any sort of context. And this was in 1995, 96, just a few years after the end of communism. And what happened then with the end of communism, all the factories, everything that had been government owned suddenly was privatized. So people who worked at factories, who owned apartments, they were granted ownership. So for factories in particular, if you were an employee of a factory, one day somebody showed up and gave you little slips of paper and said, "Here, these are vouchers," and they kind of represent a share in the company. So Uncle Sam came along and said, "Gosh, what we can do is we can set up for all these brand new shareholders to trade their shares, and by doing that, we can make sure that capitalism takes root and communism doesn't creep back." So they needed people to put together these stock markets and go off and advertise the whole idea of what a stock market was. And I was 25 years old. I knew just enough about stock markets to be a little bit dangerous for my 2 years of working on Wall Street. So I traveled around Kyrgyzstan, which is one of the most remote places on earth. And I went to some of the most remote places in one of the most remote countries on earth. And I would speak with company directors who were sitting under a big portrait of Lenin. And I would be telling them about stock markets and why their shares, the shares of their company, should be listed on the Kyrgyz Stock Exchange. It was a fascinating time in the evolution of the former Soviet Union. And I went on from there. I worked in Moscow. I was a stock analyst and research director for a number of years. I ran a hedge fund for a little while in Moscow. But yeah, probably in Kyrgyzstan it was an exciting time to be there, just as things were changing at the end of the Soviet Union.
Now, let me ask you this, Kim, because when I hear people talk about international investing overseas, it's amazing how they'll just compare markets like on a valuation basis and provide historical analysis on why, over time this usually happens. This is cheap and it's good. Yeah. And for the last 10 years, I've been listening to this strategy and different strategies in international investing. And it just so happened the U.S. has been the best performing market. With you, your methodology is a little different. It's not just looking for cheap, but you're not saying, you know what, guys, you should invest in China because, they have high population growth and eventually they're going to become the largest economy. Like, you're not talking about stories that everybody knows. It gets really more detailed, which hopefully we could dial down and explain, because your methodology really is the boots on the ground and going into these countries. Why don't you go over that a little bit? Because that's fascinating. One of the reasons why I listen to you, because whenever I see you, you're in plain clothes in the middle of nowhere in a picture, like, talking to locals, right? Not necessarily businesses, and just, providing that insight, but you're finding valuable information that I don't feel I'm finding anyplace else. It's the same thing when I listen to people tell me about international markets.
Yeah, there is the thing, Frank. You can sit behind a desk and read about a country and write about a country. But I think most of the time you spend a day in that country and you'll learn 10 times more than you'll learn sitting behind a desk, just because you get a kind of sense of feel for the energy. You can see how things will work or don't work. You can see what people are doing. You can see how many people are out. You can actually go and talk to people. And a few months ago, I went to Bangladesh, for example. And Bangladesh is a country that you hardly ever hear about unless there's some horrible flood. The entire country is on a delta, so it floods all the time. Or if there's some terrible garment factory fire, and it's the world's second largest producer of garments. The chances that your whatever underwear or undershirt or t-shirt is made in Bangladesh is pretty high. And it's a country, it has half the population of the United States, so around 160 million people, and they're all crammed into a country that's the size of Iowa. So if you think of Iowa and you put 52 times more people into Iowa, that's what Bangladesh is. And it's one of the poorest countries in Asia by a long shot. It is incredibly to do business there. The World Bank does an ease of doing business ranking, and Bangladesh is rated 176th out of 190 countries. So it's in a lot of ways an incredibly difficult, challenging place. But you go there and there is so much activity. There's so much building. There are people everywhere. And you can see Bangladesh is fascinating because over the past 20 years, it's been growing between 4 and 7% per year, regardless of financial crises, regardless of what's going on in the rest of the world. Now, granted, that's from a very low base, but this is a country that is, it just has so far to grow, and so it needs so much. There's so much to be done. There are no Starbucks. Not that it needs Starbucks. There are no Starbucks. There are no McDonald's. There are no international banks there. When you look at projections, economic growth projections, Bangladesh is going to grow at easily 5 to 7% for the next 15 years without breaking a sweat and without things really changing that much. And you just think, let's say Bangladesh moves from 176th on the ease of doing business ranking to, 140th. How many more businesses would be created and how much more growth would be created? A lot of people look at markets and say, well, everything's terrible there. But if you look at it and say, but what if 3 things went a little bit better? Bangladesh could go to the moon. Now, another thing that you also get a sense of when you actually go to a place with Bangladesh, with a lot of emerging markets, infrastructure is an enormous challenge, because you say, well, nothing can really happen until there are power lines, until there are dams. And with most countries, building that infrastructure is incredibly expensive because countries are large. They're big, you have a lot of land to cover. Now in Bangladesh, it's a small country. So building all that stuff, you're not building a power line across Russia. You're building a power line across Iowa, or you're building roads in a small country. So distribution is cheaper. So getting stuff to people is cheaper. So it's that much easier to generate that kind of growth. Bangladesh is one of those places that it's not easy to invest in. Few people will invest in an ETF that invest in Bangladesh, but it's one of those countries, I think, where if you have some money you want to put away for 10 years and not think about it and look back and find that it's gone up 5 times easily, I think that's one of those countries. And
now, are there ETFs available, Kim, for that? Or like, how do you, so what you're interested, I don't think I mentioned that you name your newsletter International Capitalist. And I know it's based in, how would you tell your subscribers how to invest in something like that?
Well, with Bangladesh, Bangladesh has capital controls. So, you can't go to interactive brokers and with a few clicks buy a Bangladeshi share. And the only way that a foreigner can really buy shares is through an ETF. It's London listed and it's XBAN, and it's a fairly small ETF, something like $25 million market cap. What I try to do usually with International Capitalist, which is the newsletter I write, I try to find something that's a little bit more exciting than an ETF, because even though it's an exciting story, the angle, you're not going to get a whole lot of juice out of an ETF. It'll go up, even if it goes up 5 times in 10 years. What I'm looking for is those really more off the radar opportunities that are going to go up 20 times in 5 years, that you can find in some of these markets that are overlooked, that people don't like, that are cheap for good reason, but can become just a little bit less cheap quite easily.
Now, I'm going to get to other markets, but I also know that you have a guide here, and I'm going to get to it really quick because I have it up, I believe, on how to get sped up on new countries, and then you go into the personal safety while traveling, and you're saying over your 25-year career, I visited tons of places. I guess I'd like to know how many countries actually you did visit, but you say, listen, most of this, you just, if you're smart, it'll be cool, but you also highlight, but in Venezuela, you better really be careful because almost everyone there has been robbed, like just Venezuela and every other place. I'm just curious, are you ever really nervous? Because I know you know what areas to stay out of and the people to talk to, but still, when you're looking at places that you've been in the Middle East and things like that, I wonder if you're worried and for people who want to take that journey, I know you probably provide that service as well. Is it something that you highlight, like, I'm curious to see someone who's in the field all the time, how worried you actually are at some of these places, even though nothing happens.
No, rarely. I think that, it's, if you live in a big city, you kind of know where to go and where not to go just because you've been around, but you also know where to go and where not to go just because of how things look and how people are looking at you and what the environment's like. And, that's true in 95% of the rest of the world, in my experience, and you exercise some reasonable caution. Venezuela is one of those places where I went there 3.5 years ago, and it was in terrible shape, and it's gotten, as far as I've read and heard, 15 times worse since then. In general, most places you just exercise basic common sense. And you don't advertise that you're clueless. You don't look at a map in the middle of the street. You don't dress in a way that screams, I'm lost and dumb and rich. One of the things that's with International Capitalists, with a lifetime subscription, we actually go and visit some countries. So with subscribers, I'll go to Bangladesh. We went to Qatar in the Middle East. Went to Sri Lanka 2 months ago. And so far, it's been pretty small groups and been a lot of fun. We just go off and have a bunch of meetings, hang out, drink beer. It's a fun. It's a way that I like to share this sort of thing. And also, I think some of the feedback I've gotten is that people have said, "Look, I never would have gone to Qatar, but I thought, what the hell? I'll go now."
Now, what is some of the common things, Kim, that you hear from your subscribers who go on these trips, and some of the things that you look for? Because, I think if anyone listening to this right now say, "Oh, sure, I'd love to do that," and I go there. But what specifically that you do that allows you to to basically find as much information as possible, right? Because you're there to find the best investment ideas, right? And by doing that, how is people believe, well, if I just talk to the management of companies, which in China was difficult for me because most people say one thing, and it's you really need someone there to tell you who's full of it and who's not, which is some of the locals. So how do you gauge that as someone who's been doing this for decades of finding the real story that nobody's talking about?
On the one hand, you want to go in, you want to visit maybe a company management or two. You also want to visit a brokerage house, a couple of economists. You want to talk to people who don't have vested interest in telling their story to you. And you might find those people in different places. I've gone to countries and sometimes journalists who I've met through a friend of a friend. They don't have an axe to grind, so they'll tell you how they see it. But I think the best way, on the one hand, yes, I'm looking for an investment opportunity, but often I'm looking to understand a place a little bit more. And often the best way to do that is just to wander around and you put on your walking shoes and just walk and stop in obscure little places, go off the tourist beaten track, find the strange little restaurant and make a minor idiot of yourself because you can't make yourself understood. And then, the menu is in something you don't understand. So you just point to something, or you point to something that somebody else is eating. And, maybe you don't come back with the greatest stock, but you might meet people who you can, well, maybe you do, maybe you don't. But in any case, you develop relationships and you can call somebody up later on and say, hey, we were talking about ABC. Can you tell me what's going on there? Or can you introduce me to someone who can help me out with this other angle? I guess when I go to a country, I'm not dead set on finding the stock to buy because I'm only there for, I'd love to be able to spend more time. But by the time you actually begin to figure out names and everything else, it might be too late. And you don't have enough time to make an appointment, or else I try to do as much research as I can beforehand. So that's actually another part of it. Before I go, I put together the past 3 years, everything the New York Times, the Wall Street Journal, the FT, Barron's has written about a place. I review all of that. And, the international media is going to have their certain angle. And they're going to say certain things that may or may not make sense once you're there. But you begin to put in pieces of it's a mosaic, right? And you put in some pieces. Then when you get there, you put in other pieces, and maybe you finish the mosaic, or you come as close as you can to finishing it once you're back.
What you just talked a little bit about, but what is that the biggest misconception? Because when I went to the World Cup in Brazil, from the things I was reading here, there's body parts in the water. It's extremely dangerous, and I just came off a back surgery at 3 months where I could walk okay, but if I had to run, I wouldn't be able to run. I have to be honest with you, I was kind of nervous, and I went there, and it was one of the greatest communities. It was everywhere we went. It was beautiful. People were nice. It was great. And you talk about in Brazil, when Brazil got crushed by Germany, 500 of Brazilians, all faces painted and stuff like that. There was no riots. There's nothing going crazy. When we read stuff here, you would think, okay, be careful of Russia. They rigged our election. You be careful of Mexico. They hate us now. I mean, but is that just some of the misconceptions, or what are some of the other things that you see that people don't get when it comes to the international markets? Because when you go there, people only believe what they read, right? Because they've never been there before. And when you go there, it's kind of like a lot different all the time, at least for me when I travel international.
Yeah, totally. It's like the local news, right? If it bleeds, it leads. And if I'm a journalist, I know I'm going to get maybe a story every 2 weeks about my country into the paper. It's got to be something that really grabs people's attention. And body parts floating in the river grabs people's attention, even if it's not an accurate depiction of the reality. It is, Russia is a great example. It was during the time I was there, Russia went from being a pretty poor country to being extravagantly wealthy in certain pockets. Downtown Moscow was, people dressed better than in any European capital, and there was more money floating around thanks to the commodity boom in the 2000s. But I would go and visit relatives, my wife's relatives in Ohio, and they would say, "Oh, Russia, are there still bread lines there?" And I would think, "What?" how can there be such this huge, misperception and disconnect? And I think the thing is that people, at a certain point, people absorb something and they kind of store that in their head about how something is. And this is investing with this is 15 other different arenas of life. And unless there's some event that causes them to displace that perception sticks in their head. My relatives saw on TV, probably at the end of in 1993 or whatever, that there were bread lines in Moscow, and people were so poor and the economy was so bad that people had to stand in line for bread. And 10 years later, I can guarantee you there were no bread lines. People could get baguettes if they wanted it. But if something hadn't happened for that perception to be displaced, then you're still going to be thinking about bread lines. And I think that Russia also has had a reputation as being a big mafia country, big mafia state where everything is run by gangsters. And I lived there for 9 years. I never, ever, ever had any sort of remote run with a gangster, because gangsters are not interested in 99.9% of the population. They're interested in that tiny portion of the population that has a lot of money. And everybody else they could care less about. Yeah, the misperceptions are from everything of how people live and how people look. And actually, it's interesting. I live in Singapore, and Singapore, it was probably now 15, 20 years ago, there was an American kid who was caned here. Caning is, when you're whipped essentially with a bamboo stick. And then President Clinton got involved to try to reduce the sentence, and it was all over the news in the United States. So a lot of people, when I mention in the U.S., I live in Singapore, they say, "Oh yeah, dude, are people caned there?" Either that or chewing gum. But chewing gum is illegal here, and as a result, Singapore has this perception as being this incredibly harsh and severe place to live. And you come here, and I don't chew gum, so it doesn't bug me. But I can do pretty much anything I would do anywhere else, and it's fine. If I want to say something nasty about the government on Facebook, yes, I will get in trouble. But I've never had the inclination to do that. And why would I? I'm a guest in the country anyway. So there's the perception versus the on-the-ground reality can be so different. And you don't really get that until you go off and you spend some time in a place. And like you said, you see there are not body parts floating down the river.
I'm a good example of that, because when we met, I heard the same thing about chewing gum, and I'm thinking, wow, don't mess with the police. And every encounter that I had with the police, they as nice as could be, but they just, it's really cool because you don't mess with the police there. That's it. And if you don't, everybody gets along. There's little crime, everything's cool. And everything goes along just as fine. So for me too, I was like, whoa, I just be careful. And everyone's like, oh, they cross the street. Some of them spoke English. It was, they were just nice. So that my perception was like, whoa, just be very, very careful. You don't want to mess around here. You get thrown into international jail or something. So, and I love Singapore. It was a beautiful place, and it was great because that's, again, that was when we met and had some great dinners and really cool stuff. But I want to get into that now that we took the methodology, and sometimes people love that, and some people are like, well, Kim, just give me some of the stocks of the countries and stuff like that. I want to go into a couple of ideas, and guys, be conscious that Kim does write a very popular newsletter, so he's not going to give away stuff that that he's giving away just recently for his paid audience. What are some of the things, or maybe individual stocks that you like to look at that you're saying, wow, this looks pretty cool? Maybe if it is something in Russia or someplace else that maybe you could share.
Yeah, that's a good question. And Russia is a market that I still look at a lot. And just because I've looked at it for so long and I'm still interested in it. And it's a market that's the cheapest stock market in the world by a long shot, but it has been for a very long time. And a lot of that has to do with political risk. And we've seen that in spades recently when the U.S. government imposed a whole new raft of sanctions, and the Russian stock market fell something like 8% in a week. There is a company that's pretty much Russia's version of Google. It's called Yandex, and it's traded on the NASDAQ YNDX. And its share price has gone up and down, but it's back to where it started in 2011, even though the company's revenues have grown 3 times over that period. And it's expanded. It has a big an alliance with Uber, and it's doing all sorts of delivery, and internet penetration is growing fast in Russia. It's quite high. It's a very internet savvy country. And this is, I guess, the point, though, is that when sanctions, well, the latest wave of sanctions was announced a few weeks ago, pretty much all Russian stocks fell. Some fell more than others. The index was one of them that fell pretty hard. And the key point of the most recent bout of sanctions was that company heads or owners who were who the U.S. government believed were closely associated with Vladimir Putin were going to be sanctioned. And the index it's a company that has been developed since the end of the Soviet Union. So it's a new, quote unquote, new company. It's not a big steel company or metals company or oil company that's built on assets that were around before the end of the Soviet Union that oligarchs took from the government essentially and said, guess what, this is mine now. This is a brand new company. So it doesn't have that sort of historical baggage. And the management has nothing to do with Vladimir Putin. There's no historical relationship at all. But still, the share price of the index was thrown out the door along with the rest of the Russian market. And it's since then rebounded somewhat. But I think that's a particularly interesting story when you look at all the different arenas that the index is expanding into. When you look at internet penetration, and it's Russia's Google, but Russia favors certain companies and it does not favor Google, put it that way. So Yandex has a certain favored status within the Russian search environment as well.
That's definitely good to know. And I guess we'll finish up with this, which is surprising to me that Zuckerberg's testimony got more publicity than North Korea, South Korea. Is North Korea someplace that you're actually looking at after you're seeing a lot of good things are being said? You probably know more than me. We only know what we read here. It seems like they're going to open up the markets. It seems like things are getting a lot better. Is it a place where, almost like Cuba, where you're seeing people rush into it and say, okay, this could be a big tourist destination. This is not that that's going to be a tourist destination, but you're probably going to see if they open up the markets, maybe a little more capital. Is it something that, and you can't tell me that you're not going to be nervous going to North Korea, I would think. But is this some place that you would think of investing in, if you can?
Oh, yeah. No, I think North Korea would be awesome. But I think that when you look at the enormous potential, I mean, infrastructure alone, everything, a country that has nothing, essentially. And you also have a built-in group of investors. You have Korea, that if 15 things happen and the leader of North Korea does what he says he'll do, and the U.S. President Trump doesn't do something off the wall, if all of this comes together and the Koreas actually unify, I don't know, I think you would have a multi-decade investment period. And my sense is that a lot of South Korean infrastructure companies would be huge beneficiaries of massive spending in that part of the world. I'm sorry, in that part of the peninsula, in North Korea. But yeah, I think North Korea would be fascinating. I would love to visit. I visited Iran a few years ago before it was closed to people with a U.S. passport. But no, I didn't get the opportunity to visit North Korea. I would love to. I think that'd be awesome.
And Kim, I love the way you're thinking about this, and listeners too, is for me, I'm like, man, North Korea's going to be cool. Yeah, you can invest in it, but already you found a way to invest in it, which makes so much sense, right? Because I'm sure you're familiar with the infrastructure companies in South Korea, but a lot of that is they're going to get a tremendous amount of business. I mean, that has to be, look, it takes a long time to build these things, but that has to be a huge catalyst, I would think, with something, if that does happen and they do, again, it's they just merge, that could be a big boom. And looking at South Korean companies could be a way to actually play the growth and everything that's going to happen in North Korea, I would think, over the next decade. So it's interesting how the way you looked at that. I thought that was pretty cool. I'm thinking, well, we won't probably invest in North Korea just like Cuba for a very long time, but you actually can.
Yeah, it's tricky, but you can often find an indirect way of investing in a lot of markets. When I mentioned Iran, when I visited Iran, I found a way you can't invest directly in Iran as a Westerner, but there was a Turkmen oil company, or rather a London-listed Turkmen oil company. Turkmenistan is in Central Asia. It's on the other side of the Persian Gulf. And I don't remember the specifics, Frank, but the part of my investment thesis of investing in this Turkmen oil company was that if sanctions on Iran were lifted, the cost of this for this Turkmen oil company to transport its oil would be reduced dramatically, like $10 per barrel or something cheaper to transport its oil. If sanctions on Iran were lifted, because then they could actually transport it through the country instead of around the country. And as it happened, sanctions on Iran were not lifted, but bought out. So
it's better that way.
so my subscribers did fine anyway.
Yeah, it's better that way. They don't care. No, as long as you're making, it's better to have the wrong thesis and the stock goes up than have the right thesis and the stock goes down, which actually happens sometimes. So yes, I hear you.
Exactly. It was a complicated thesis, but yeah, it worked out anyway.
That's great stuff. So Kim, if someone wants to find out more information from you, how could they do it?
A website, it's kimglobalinsider.com and Kim, K-I-M, globalinsider.com. And I have a special newsletter there that's every so often, a couple times a month, that's focused on international issues. kimglobalinsider.com, or else stansburychurchhouse.com, where you can sign up for our daily e-letter.
That's great stuff. Well, Kim, thanks so much for coming on the show and sharing so much and your ventures and stuff like that. I know that, again, I tell everybody, you're the one guy that I trust when it comes to international markets, because it seems like everybody else I listen to, I lose money. So, guys, definitely take a look at the site. And again, I really appreciate you coming on, bud.
No, thanks so much, Frank. Thanks for having me.
Okay, guys, great stuff from Kim. Good friend. It's great when I met him in Singapore. We all had fun, a couple drinks, went out with Porter, and we just clicked. And he's this smart guy. He's awesome. He tells it how it is. You look at his newsletter, it's everywhere in these countries, and I learn something every time I read his newsletter. But I mentioned it during the interview where a lot of times where everyone else I listen to, this market is cheap based on this, and this is why over this time period, things are different now. And they say, well, you got to be careful when you say things are different now, because history has a way of repeating itself. Well, yes, it's a little true, but when you're doing something that's unprecedented in the first time in the history of a country, where you lower the rates to absolute zero, and you basically throw money in the banks and backstop them, you know what? It is different. You got to treat things a little different when that happens. So it's not always like, these are cheap. When you're looking at a market in America and stocks where they have a big punch bowl, where we're trying to inflate the market as much as we can, the biggest market in the world. I mean, it should be no surprise since 2010. I mean, how easy money has been. Right? Our policies, starting to relax policies now. Now we have, new tax reform. Forget about what side of the aisle on with politics. But these are very good things for businesses that continues growth. And you know what? For me, it's like I'd rather have at least most of my money here. You want to be diversified. But you're in a really good market even today. I mean, the fundamentals are good. Earnings are good. Yes, some companies are reporting blowout earnings, and you'll see them come down a little bit, which has been the trend the last 2 quarters, but they bounce back. You have strong earnings growth. The housing market is stronger than it's ever been. More equity in homes than ever. $5.4 trillion of equity they could tap. Do we have debt? Yes. Do we have, we want to lower our deficits? Yes. The tariff story is kind of waning down a little bit. Yes, we're going to work out with everybody. Of course, just like we said, it's a non-event, even though we pushed the market down 7-8%. Hopefully use as a buying opportunity, like we mentioned, because it is a non-event. But other people, like, do just, you got to allocate since 2012, 13, 14. You got to put more money into international. And you know what? Some of these markets, over the past year or two, okay. But I've lost a lot of money listening to the wrong people. And Kim's one of the guys I like to listen to. For example, really quick here, before I get to my educational segment. Kim's a good analyst when I asked him about North Korea. For me, I'm like, okay, there's not going to be any investments in there. And to invest in South Korean infrastructure companies is brilliant. That tells me he's a really great analyst, which I already knew. But a good analyst doesn't read a story and takes that story, a great story on Boeing hitting record profits, and then runs out and goes and buys Boeing after the story's printed everywhere in 100 places after they report earnings. They look at that and they dissect it and say, okay, what specifically is hitting records? What specific planes? And Boeing and Airbus have 2 specific planes that they have massive back orders for, like 7, 8, 9 years. I know. I visited the Boeing plant to find all this information out. I looked at all the who the biggest suppliers to those planes, because that's guaranteed revenue for how many years? 5, 6, 7 years. So maybe Boeing's not the best player. Let me look at some of these other part makers. Are they specific to that? Do they make parts not only for Boeing and also for Airbus for those two specific planes that are smaller planes that provide 20% fuel efficiency, which would save millions and millions and millions and millions and millions of dollars for these guys over the life of the plane? Right? All their customers, Delta, everybody buys planes. That's the goal, right? You want to lower your cost, the highest expenses fuel. You want to lower that as much as you can. And how do you do that? Well, Boeing comes out with the best materials, the best things that they could do, carbon fiber, lower the weight of the plane. They come out with these new planes, and then they get orders for the next 10 years. They got to build those planes. A lot of that stuff's factored into Boeing's price. They announced it. Oh, this company just announced this company's buying $15 billion worth, 50 planes for whatever. I'm making up numbers, $50 billion over the next 10 years. Whatever it is, whatever airline. That's cool for Boeing. That's going to get factored in now. But it's not really factored in for the part makers. That's more of a lagging thing, right? They're going to get those orders later on. So you might be able to find a cool company that's cheap that nobody talks about. That's what really good analysts do. To find something of how you can profit right away. It's going to take infrastructure is going to take decades to build there. But once they get the contract announcements, these companies are going to go through the roof. So that's what good analysts do. I love Kim. Again, that's me. Do your research on them. If you like them, that's fine. But that's one of the only people I listen to when it comes to investing internationally. I'll ask them about countries, what's going on. And, we have a pretty good relationship. Probably going to be doing some business together down the line. And again, he's a good friend, someone I trust. And more important, he's just an amazing, amazing analyst I have a lot of respect for. So hopefully that came over good. You guys liked it. But this podcast is about you, not about me. So let me know what you thought at frank@CurzioResearch.com. That's frank@CurzioResearch.com. Now, let's get to our educational segment. So Apple reported earnings. They beat by 5 cents. I mentioned this in a Facebook video. Look, Apple's probably going to go up, probably going to beat earnings because expectations will lower tremendously. With Taiwan Semi, who makes the chips for just about almost every single company out there, most of them, not all of them, but most of them, warned that smartphone sales are coming down. They're really weak. We had Avago, which is Broadcom, announce it and say, yep, they're coming. All these part makers. Now, what's the difference? Apple's reporting what they sold over 3 months. These phones were built 6 months ago, 3 months ago, whatever. What TSM is warning, what Avago is warning on what's going to happen in the future. That's what you need to pay attention to. That's something people aren't talking about with Apple. But let's break down the quarter. They reported $2.73 a share in earnings, and 5 cents better than consensus estimates. These are positives. Revenues rose 15% year over year to $61 billion. That was better than $61.1 billion, and they had the estimates of $60.9 billion, so a little bit better than estimates. iPhone shipments, right? This is a positive because it's 52.2 million. That beat the estimates of 52 million, right? That's the units. They announced a new $100 billion buyback program, which always boosts every stock during earnings, right? They increased their quarterly dividend to 73 cents. That's a 60% increase. Their yield is around 1.7% right now. So 20% growth, a 20% plus growth in Japan and China, which is really good. Said active pay customers doubled. Talk about their service revenue. They're on target to hit the $16 billion that they said they were going to hit, which is great. But let's look at everything here. Okay, let's look at all the details. So if you look at unit sales, 52 million, right? That beat estimates, that's fine. But if you look at last year, unit sales was 51 million. So they only sold 1 million more phones. Again, just one data point. You could sell them for higher prices and margins. Just one data point. Just surprises a company that's like, wow, things are really better. Well, you only sold 1 million more phones compared to last year. And you had 3 brand new phones that came out compared to last year, which was what, 1 or 2? iPad shipments, they will beat estimates. It came in at 9.1 million. And they were like, this is great, new customers. Well, last year you sold 10.2 million. So you're seeing a decline on iPad sales from last year. Again, maybe you're selling for a higher price. We're not going to get there yet. I'm just letting you know that year over year, iPad sales declined 1 million more phones, which, again, 1 million is big for a tiny company. For Apple, 52 million from 51 million. It's not the blockbuster growth that makes me think your stock should be trading close to an all-time high. Gross margins, 38.3%, lower than estimates. Interesting. Margins getting, this is something that always if you look at, I don't want to say the laws of the dynamics of everything. When you sell hardware, usually for every other company other than Apple, like year after year after year, a lot of times it's hard to sell these products. Like GoPro, look, just usually your margins go low. It's hard to sell higher prices. Apple is just that brand that can actually do it, right? But in the end, they're a hardware company. That's what they are. And they said, hey, we're getting to our $16 billion services revenue. I hear analysts talk about this all the time on TV. $16 billion in service revenue. Imagine you had a business that's $16 billion in sales. Holy cow. High five everybody. Great. Wife's happy. Everybody's happy. Make it a fortune. You have a bunch of boats. But when you look at Apple does $260 billion in sales, which they're projected for this year. $260 billion. So we look at the $6 billion. What does that amount to? A little over 6% of total sales. It's a blip on the radar. So you say, wow, they're increasing that. And it's a little bit, a higher margin business compared to hardware, but not too much because the hardware, they're doing very well. So $16 billion in services is a great thing, and it's growing, but it's not going to move the needle. 6% of sales. Because Apple is an iPhone company, period. That's it. And they went as far as say, you know what? We collect far less data on our users compared to, bringing up how Facebook and Google, everyone's kind of attacking each other right now, these companies. Collect far less data. It was great. Facebook got into, say they're going to get into dating services and match that. Every company within that industry, and they're making fun of Facebook as their stock is crashing by 15, 20%. Match.com, all these companies. And they're like, oh, nice of you to join the industry when it's already, well, obviously it's a big deal because your stock's getting crushed. But anyway, these companies all of a sudden are starting to talk bad about each other. I'd rather they say nothing, because what that tells me is they can never have a business model like Google or Facebook, who are killing it because they have a digital ad-based model that's something, it's secular growth for the next million years, right? I mean, still, if you look at digital advertising and the money pouring into it, and when you look at all advertising, it's still not a huge percent. There's still massive, massive growth there. There's pricing power there. Apple's telling you, well, we don't do that. As an investor, I wish I didn't say anything about that, because it makes me think, wow, that's a massive business that AT&T is trying to penetrate by buying Time Warner. Took a shot at Facebook. For me as an investor, I thought that was a negative. But you're looking at a lot of these metrics. Now, Apple beat earnings, right? Apple beat earnings. This is amazing, guys, because I'm going to bring up some stuff here. Stay with me, because it's very important. I'm not ragging on Apple. I'm just trying to provide all the facts to throw in front of you compared to this. I won't say it, the crap you're seeing on TV that they're not talking about. Because what you didn't know about Apple is what you're seeing. Wow, Apple beat that number. I thought it was big. What you didn't know is, if you're looking at the amount of analysts, and I'm going to bring this up right now, the amount of analysts that cover Apple. Okay, perfect. So I have that here. So the amount of analysts that are covering Apple, if you look at them, they are 43 analysts that cover Apple, 43 of them. There's zero sells on the company. Nobody has a sell on Apple. Why is that interesting for? Because what these analysts did, right? No one wants to put a sell on Apple because the biggest company in the world. They do have a lot of cash, but if they raise money, people could generate a fortune, right? So they want the investment fees. So they're not going to put a sell on a company. But what makes it worse is, if you're looking at Apple and what they did, their estimates were incredibly higher a couple of months ago. If you look at the guided Q3 revenue for 51.5 to 53.5 billion, right? And it says that's basically in line with the 51.5 billion consensus estimates. However, that estimate from these analysts, right? No downgrades. We saw no downgrades on Apple. Yet these analysts, listen to what they did 3 months ago. Because Apple came out and said 51 billion, right? That the estimate that they have now is 51 billion. Apple said, okay, we're going to guide third quarter revenue to 51.5 billion. That's in line with consensus estimates of 51.5 billion. Okay, now the consensus estimates, here's what these analysts did. 3 months ago, that consensus estimate was 54.5 billion. 2 months ago, it was 53 billion. Last month, it was 52.4 billion. Now analysts have it at 51.5 billion. And it's amazing. Apple came in, and that's what they guided for. So if these analysts kept their original estimates over the past 3 months, Apple would have got crushed and missed their estimates by a mile. They basically would have warned. They would have warned. Because you had 54.5 billion 3 months ago. That's what all these 43 analysts projected. You know, they take the consensus estimate out of it, and here's what you projected, right? Apple came out and said, well, it's around 52 billion in sales for next quarter. They would have missed by a couple of $1 billion. But instead, these guys, without downgrading, this is stuff you don't see. They lowered their estimates significantly. Now, why is this a big deal? Because they beat the headline number, right? Hopefully you guys are staying with me. They beat the headline number. Everybody's like, yeah, that's great. All right, Apple's great. It's up 3% today. It's awesome. It's at 175. If you look at some of these analyst estimates, 3 of them here, BMO Capital has a 166 target on Apple. It's 175. And they have a neutral rating. They should really have a sell rating on it, right? You're saying your target's 166 and it's 175. It's over your target. Deutsche Bank has a 152 target on it. They have a hold rating. Why don't they have a sell? Well, I know why. Do you know why? Because they want the investment banking business. So you think Apple's worth 152 in your target price. You have a neutral rating. It's trading at 175 because it's Apple and I want the investment banking business. Goldman Sachs. I'm not talking about just these boutique firms. Goldman Sachs, 159 target. It's 175. Maybe they raise it after this quarter. They'll come out with a report tomorrow. They'll probably raise it. This way they make sure, because there's guys at Goldman that say, you better not put a sell on Apple, because that's going to get news every place, everywhere. The only analyst out of 40-something that has a sell on Apple is Goldman. You're going to make that call. Let me tell you something. They're going to put you on CNBC for the whole, from like 9 a.m. to like 4 p.m. if someone Goldman Sachs does. Whatever analyst does that, they'll have them on for like a week straight. It'll be the biggest story ever. You see headlines ever. Goldman Sachs says Apple's a sell. You'll see it everywhere. It'll probably result in the market coming down since Apple's such a big part of all the major indices. Goldman won't do that. They'll raise their target price a little bit. They'll lower their estimates, but they'll raise their target price. That's how effed up a lot of this stuff is. You should know this. Now, why is this a big deal? You say, well, Frank, it doesn't matter. They beat the estimates. Well, it is going to matter for the future. Apple's not reporting those strong growth numbers that everybody believes, and it's going to come back to bite them in the ass because smartphone sales are coming down like crazy. That's what we've been told by the people who manufacture these things and not seeing huge sales right now to grow those phones in the future. What does that mean? Well, if you look at revenue forecasts, 2018, they're expected to generate $260 billion, which is this year. You know how much Apple's supposed to generate next year? $269 billion. That's 3% growth in sales. You're talking about Apple. I thought the quarter was just great. I thought everything's rocking and rolling. You're only going to grow sales by 3% year over year. I'm taking the analyst estimates here. Something has to give. Because if you're growing slower than the market, you don't deserve the same multiple as the market. That's what's going to happen in the future. I mean, this goes out if you want to take their estimates for 2020. You're looking at $276 billion in revenue. That's only 2.5% growth. You would think they're growing like crazy. Year over year, they grew 13%. But if you go from 2018 to 2019, it's a different story. It's 3%. If you look at gross margins are expected to stay flat over the next 3 years. I think that's super aggressive because people are not going to continue to pay $800, $900 for a freaking smartphone. Selling price is like $750. They're not going to continue to pay these prices unless they get something that's worth it. And right now, the new generation of phones isn't really giving you something that's, holy cow, you have the iPhone 10, take a look at this. You don't really have that. Maybe it's wireless charging. Maybe, I don't know. Maybe that helps in the future. There's a whole story behind wireless charging because that requires glass. That requires more money to make these components. Not that easy. So how do you increase the margins? But if you look at Apple, even the analysts don't expect margins to grow at all over the next 3 years. If you look at EBITDA, right? Very important measure. Right? For interest, taxes, depreciation, amortization, more of a pure number. You're looking at a company that grew 10% year over year, which is good. It's still slower than the overall market. It's growing about 15%, the average company. But if you look at from 2019 to 2020, you're looking at EBITDA growing by 3%. And the following year, only 3%. That's much, 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 much slower than the market. Now, when I go down to earnings, this is where it gets interesting, guys. Now, when you go down to earnings, they grew earnings. They killed it, right? They did well. But when you go down to individual earnings, why I like to use EBITDA, it's a more pure number. When you go down to earnings, they're expected to grow their earnings. Remember, everything else is growing like 2-3%. We look at sales, EBITDA, margins aren't growing. But when they go down to earnings, the estimates call for them to grow by 12%, which is still slower than the market. It's still going to be slower than the market because we expect to grow probably 13, 14, 15% from 2018, 2019. Now, how are you growing earnings that fast when you're looking at the other? You're not growing sales that fast. You're not doing, your margins aren't growing. You're not going to be able to charge higher price. How is it? Bingo. That's the reason why you come out and you announce a $100 billion buyback. This way you can buy back your shares and inflate your earnings. So when you see a company come out and announce a major buyback like that, it's usually a sign of weakness, not for the stock price. The stock price is going to go up because you're like, well, you're going to decrease the share count. That's going to inflate earnings. That's what Apple needs to do. They have a good balance sheet. What does this mean? It doesn't mean you should go and short Apple. It means that a lot of this growth isn't really, the slower growth is not factored in. Nobody's talking about this with Apple. The slowest smartphone sales is going to crush this company, but they can make it up with their balance sheet by buying back their stock, raising their dividend, which they did, right? Smart move, get a lot of income people in there. But what this also tells me is, one, Apple is a big market stock. If it comes down, it could pull the market down. But even if it doesn't, for me, I see so much more value out there than buying Apple. And that's what's important as an analyst. You want to look at a bunch of different companies. And if someone gives you a company that you say, wow, this thing could really go up 50% a year, compare it to the competitors. Maybe there's something that's cheaper. They have more catalysts. You have the insiders buying. It has more growth over the past 12 months. And they're projecting this growth to continue. They're in better markets. If it's a chip company, are they in, PCs, which is terrible, or is it Internet of Things? Is it AI? Are you making chips that incorporate AI? Like, NVIDIA, Intel, those are massive growth markets. Auto, sensors, stuff like that. There's a big difference. So for me, when I look at Apple, I think, yes, there's a lot of risk in this stock now. I wouldn't touch it. Could it come down? I don't know. I mean, it's just they have a balance sheet. They can continue buying back stock and inflate their earnings, which is fine. We've seen a lot of companies do that. I'm not picking on them. But what does this mean with Apple? When I compare it to a company like Facebook that has massive growth, it's growing 45% without really inflating their earnings or manipulating their earnings, growing 45% and trading at a market multiple, Facebook to me is a screaming buy here compared to Apple. And that's how I do my analysis. But the numbers I gave you, nobody's talking about with Apple. They beat the quarter. They're good. I thought it was going to be bad. It was bad. But the analysts lowered estimates significantly over the last 3 months so they could beat these numbers without downgrading the stock. There's no sells on it. Pretty amazing. So for those of you who don't think there's a bias out there when it comes to sell-side research, there it is. You have companies with a lower price target that don't want to put a sell rating on it. Interesting. And you got all these companies, every one of them lowered their estimates significantly. Not one of them downgraded, not even from a buy to a hold. Why? They want investment banking business from a company that could easily raise $100, $200 billion, whatever, and take that money and then buy back more stock. That investment banking business from Apple makes your year, if you're anyone but Goldman Sachs and Morgan Stanley, which is going to do a pretty good job for their bottom line as well. So something to think about. Hopefully you follow that segment right. If you have any questions, let me know. Listen to it 2 or 3 times. That's how the market works. This eventually catches up to you. Yes, they beat estimates. Yes, Apple's up by 3%. But when you look down the line, those numbers are coming down. They're going to see slower growth. It's going to hit them eventually. That's why they had to announce a $100 billion buyback. They had no choice. If they don't, they're going to grow earnings by 2-3%, and you're going to see that stock fall probably 15% from these levels. But the fact that they have a great balance sheet, which is great for them, they're going to buy back their stock, inflate their earnings, especially over the next 4, 6 quarters, whatever. And it's going to mask a lot of the slow growth that we're going to see in the smartphone market that almost every major supplier who builds phones talked about over the past month and even during their conference calls, that we are seeing a major slowdown in high-end smartphones. So watch out for Samsung, watch out for Apple. Those numbers are coming down. Even though they beat earnings, don't get fooled. Those numbers are coming down. Eventually, it's going to hit them. But if you're thinking about investing on Apple of this quarter, I think Facebook is a much better buy. Okay, guys, I told you earlier about incorporating a lot of video, not just for subscribers, but also on a Facebook page. So you've probably seen a lot of live videos already, which is really cool. I'm talking about things like Apple and department stores and all kinds of things and topics of the day. I try to do like 2 or 3 of them every single week. But now I'm able to put screens up there this way you can see exactly what I'm looking at and the numbers and stuff like that as I'm talking. So that's all for free on a Facebook research page, Curzio research page. Also, we're able to do live interviews that you could see, which is pretty incredible, right? So you can see both of us and whoever it is, wherever they are in Singapore and stuff like that. Pretty soon, we're going to be doing live podcasts. More important for subscribers, getting video updates and a lot of video stuff going on for me in the field. Now that we have this technology, we have the internet speeds, it's going to be a lot of fun going forward, and you're going to see a lot of these changes right away. So, again, you guys want to check out some of it, especially free content and things like that to get to know our business before you subscribe to our products. Of course, that's what we love. You can listen to more of these podcasts. Go to CurzioResearch.com and listen to podcasts for the last 10 years. Listen to my opinion. Everything's accountability. Everything's there for you. You can listen to all my losers, winners, and stuff like that. But more important, things that are more timely and stuff is on our Facebook page at Curzio Research, which is really cool. And we provide live videos. So, guys, I always appreciate support. Thank you so much for listening. I'll see you in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.